Hello friends, I am Dr. Prashant Parate. I am an orthopedic surgeon and a share market enthusiast. I am not SEBI registered analyst or advisor. Please go through this disclaimer.
Fine.
प्रशांत, तुम अभी पूना में हो ना?
हाँ.
Need a service started.
Okay, ready?
Yes.
Jagan, are we live?
Yes, sir. Just now I clicked on. Yeah.
Okay. So, good evening, everyone. We welcome you all to Ortho TV Financial Friday webinars. And today we have with us one of our own, Dr. Prashant Parate, is orthopedic surgeon from Pune. And I should call him not a part-time trader, but a full-time trader now. He is going to talk to us on basics of technical analysis. And with him, we have two expert panelists who are also now going to become full-time traders very soon. There is Dr. Sachin Kale and Dr. Prasad Chaudhary. Both are my very good friends and they are professor. Both of them are professor, and Dr. Sachin is also a head of unit in the D.Y. Patil Medical College, Nerul, Navi Mumbai. So with this, I hand over to Prashant to show us basics of technical analysis.
Thank you, Neeraj sir. So I'll share my screen. Is my screen visible?
Yes.
Yeah.
Yes, Prashant.
So today we are going to discuss about different charts and their uses in technical analysis. So first we'll discuss why is analysis of stock important. So stock analysis is important to take a decision. There are many decisions which need to be taken. Most common decisions are buy, hold and sell. So either we buy a stock, if we have already bought, then we are holding it. Whether we should keep on holding or we should book profits or we should exit at loss or we should hedge the stock so that even if it falls, we do not lose money. So what should be done? What is the decision which needs to be taken at this moment? For that we need to do analysis of a stock. There are different available methods which are used for analysis. Mainly fundamental analysis and technical analysis are most commonly used things. Out of this, fundamental analysis is used very commonly by many investors. I don't use it routinely. I use only few things, but there are many things which we need to check. There are different aspects of fundamental analysis where we need to check about management. How is the management? Is it trustworthy? There are different ratios like P ratio, growth, PEG, many ratios which are used by many people. Then there are results, quarterly results, annual results, which come every 3 months and every yearly, and these results are checked by many fundamental analysts. Then future prospect and opportunities of the business of this company, whether the business will prosper and is it scalable, and lastly ground reality check. So there are many things which need to be tested. I recently saw this movie, The Big Short, and I would like to discuss about this movie in short because it is based on fundamental analysis. So there are 3 stories in this movie. First story is about a fund manager. He is one-eyed physician. He was also a physician and he became a fund manager. So he found out in 2005 that there is some issue with the bond market of housing. He found out that prices of properties are increasing very rapidly and it is likely to fall. It will not sustain. So what he does, he goes to a bank and tells them that I want to short this bond market of housing properties. There is no product available for shorting it and he gets it created for himself. He is a fund manager worth 550 millions. He is managing that much amount of money and he starts buying insurance against fall of bond for housing. The banks where he goes are laughing because they think that bond market is very secure and it will not fall, and they feel that this is free money for them. So they give it easily to him. They create new product and give it to him. He insures about 1.3 billion. Then these bankers go for party, and there starts our story number 2. In bankers party, there is another bank from another manager from bank. He's from Deutsche Bank, and he comes to know that these other people have come because they sold some useless product to some other guy, the Dr. Burry, fund manager. He identifies that there is definitely a bubble in this sector, and he goes to another fund manager. Means in story 2, this banker goes to fund manager and he tells them that this bubble is building up and the new product has been launched, so you should start investing in it. This fund manager has his own team, and he wants that bank should fall, but he does not invest blindly. He goes for reality check. So first he goes to one agent, housing agent, and she shows him 3 4 properties, different properties, and about one property she tells that I sold this property 3 or 4 times with increasing profits every time, and rates are increasing rapidly, around 20-25% yearly. Then he goes to the person who is giving the loans, sanctioning the loan from banks. Those two people tell him that we are sanctioning many loans without any guarantee, without any income, and without any requirement. We are giving it to illegal immigrants as well. So these are highly insecure loan, and purpose of doing is they get at least $10,000 for sanctioning one loan of this kind, whereas if they want to sanction secure loan, then they will get only $2,000. Then he goes to one strip club and he visits that lady. She tells him that she has 5 properties and she is not able to pay for that. He also goes to different houses. In one house, the rent person on rent tells that name of owner is dog's name. That's not real person. Another home is empty and there are many receipts where it has written that he's sorry, he's not able to pay. So this is kind of fundamental analysis he does. Then he checks all the bond markets, and most of them are rated AA, AAA, highest ranking. So he goes to Moody's, the ranking agency, and during this time the bond market prices are increasing. So he goes to Moody and he asks that lady, why are you giving A plus AAA rating to all the funds, because they are not so good. They are not based on proper fundamentals. She says that there is another office of Moody's in same building, and they are our competitors. If we don't give ranking, they will go to other party and they will get the ranking. So this is second story. And then there is third story. There are two friends, they are traders. They come to know about Dr. Burry's, the first story guy, his analysis and his paper they find. They read that paper and they start shorting the bonds from that paper, that study. So they are kind of traders and they are kind of technical analysts. So the first person started shorting bond markets in 2005 and waited till 2008 for them to fall. Then second person started selling and still the prices went on increasing. This is because even though fundamentals were not so good, there were many other factors which were affecting the bonds. So this is in short fundamental analysis. You need lot of resources and same information is not available to all people. Here comes role of technical analysis. And why technical analysis? People say that price is God. Then we should listen to what God is saying. And language of God is charts. So almost same information is available for all people. Some brokers have less reliable intraday charts, but end of the day charts are same for all because it is as NSE chart. From technical analysis, we can know our possible targets or possible outcomes, and we can define our risk provided we follow the plan. Many people define the risk but they do not follow the plan. So discipline is very important. but there are possible targets and possible outcomes which can be determined from technical analysis, whereas it is not possible with fundamental analysis. Then there are different methods based on price action and indicators. So let us see what is chart and how is it prepared. Chart is a data representation for visual effect where price is recorded on a chart. There is x-axis and y-axis. On x-axis time is recorded, y-axis price is recorded. Data of intraday trading activity and monthly, daily, all trading activities which are provided by exchange or broker supplied data are plotted and chart is formed. So there are timestamps, price tag and volume. These three things are important and these are plotted from NSE. Then there are many indicators, different indicators which are derived from these three data. There are many kind of charts which are available like candlestick chart, bar chart, line chart, point and figure chart, Renko, Heiken Ashi and many more. Let us see one by one. Candlestick chart was originated in Japan in 17th century and it was found by a Japanese man. He found out that there was a link between price to supply and demand of rice, and markets were strongly influenced by emotions of traders. So he devised candlestick chart to show that emotion by visually representing the size of price moves with different colors. For example, for up closing candles he used green color and for down closing candles he used red color. Different colors can be used as per traders convenience, but this is most commonly used. And traders use candlesticks to make trading decisions based on regularly occurring patterns which help to forecast the short term direction of price. Short term means depends on the time frame used on chart. It can be short term for intraday, it can be for a week, for few weeks or for few months to years. Let us see how a candle is formed. The data which is provided by exchanges, when it starts trading, 9:15 is standard time for Indian markets to start trading, and we can see different time frames: 5 minute, 15 minute, hourly, daily chart, weekly, monthly, and smaller time frames also. So first price which is opened, it is called as open, and it is recorded on chart as opening price. From there, if price goes up, then it is a green candle. If it goes low, then it is red candle. Close is the last traded price for the day, and uh, it is at the close of the time, means 3:30. Then there is high and low. So these four things basically form one candle: high, low, open, close. It is also called as OHLC. And there are different parts in one candle. We can see here that topmost part is called as wick, then there is bottommost part which is called as lower wick or tail, then there is body of candle and range of candle. One candle has 8 data points: high of candle, low of candle, close and open, then upper wick, lower wick, body of candle and candle range. So these 8 points can have different interpretations every time. This is a typical chart where candlestick chart has been formed and plotted. This chart I had shared about Havel's trade, and I had taken a trade on spring around 984 to 988 range, and at that time my targets were 1080 and 1230. So this was accumulation chart and all the targets were completed. And this is kind of analysis where we can identify our risk. My risk was here 955. Below 955 I was going to exit at stop loss, like I exited in Kotak Bank. But this trade gave profit and it came out nicely. There was around 9 times profit than the risk. So here we can identify how much is risk, how much is our target. There are different methods to do that. Then there are different uses of candlestick chart. like identification of support and resistance, analysis of demand and supply. These are my personal preferences. I use candlestick chart for these purposes: support resistance identification, demand supply zones identification and marking. Then market structure analysis is done using candlestick chart, determining risk reward ratio and favorable equations. Then pattern identification is very good on candlestick chart. There are different commonly used patterns. Lot of patterns are repeating, and they repeat particularly in some stocks. Means we'll see there are head and shoulders. Some stocks form head and shoulders very frequently. Some stocks do not follow this pattern. There is cup and handle pattern. Cup and handle is formed in some stocks. Other stocks don't follow this pattern. Flag and pole is another pattern. Triangle or rectangle breakout is one pattern. Market structures. Then there are less commonly used patterns. These patterns are very commonly used by many traders, and less commonly used patterns are wolf wave pattern, Quasimodo, 3D, compression, demand supply zones, accumulation distribution, markup markdown by Wyckoff, volume contraction pattern, volatility contraction pattern of Mark Minervini. These are less commonly used patterns. Less commonly used patterns does not mean that they are not good, but less number of people know these patterns. So these are some common patterns and less common patterns which are used for trading decisions, and they give us risk and probable targets before taking trades. Then there is bar chart. Bar chart is a chart which consists of multiple price bars, with each bar illustrating how the price on asset or security moved over specified time. It is similar to candle chart, but in candle chart there is body. In bar charts we can see that there are also 4 points: open, high, low, close, which is called as OHLC candle. There is another type of bar chart which is preferred for me. I use high, low and close. I do not use open for the charts, for bar charts. And technical analysts use most. This was found in USA, and lot of people use this chart or candle chart. Both can be used, and both have similar patterns, but my preferred chart is high, low, close, HLC. I use that for identification of spring. So this is same chart of Havells, and this is spring candle, which is better seen on bar chart. If you know how to see it, then it is better seen on bar chart. This is upthrust candle, this is spring candle. This is very good pattern, upthrust and springs, and one can trade only these two setups very frequently and very profitably. Usually target for spring and upthrust is, if we are taking spring here, target is upper side resistance, and if it breaks then it goes on to move higher. Then uses of bar chart, as I said, I use it for identification of support resistance, but spring and upthrust is my most important point of view for bar charts. Then it is also useful for analysis of volume spread. Volume spread analysis means analysis of volume associated with spread of a candle. Suppose we buy there is some stock which is trading in which trading volume is around 10,000 stocks in one candle, and length of that candle is around 10 points. So we study that how many shares were sold or bought in that candle and how much is spread. Volume spread analysis is very good. It provides very good information. There is hidden buying and hidden selling which can be identified using volume spread analysis. Then in bar chart HLC, I am getting echo. Hello. Yeah, now it is better. So in bar chart, which I use HLC chart, there are only 3 points: high, low and close, and there is less data on chart, so it is easier for interpretation. Some people can identify more opportunities in this kind of chart. whereas in candle chart there are 8 things which we need to analyze. So I use charts for different purposes. Bar chart has different purpose, candlestick has different purpose. Then there is line chart. Line chart is very simple chart and it is graphical representation of assets historical price action. Mostly it is plotted as closing price over period of time. And line charts can be used for any time frame, but most oftenly day to day price changes are used, means end of the day daily candle is used as line chart. Here we cannot see how is open, low, close. Some stocks are in continuous upper circuit or lower circuit, that cannot be identified with line charts. It can be identified with candle chart, bar chart, but it cannot be identified with line chart or other charts. So this is a kind of line chart. We can see same chart of Havels where spring was formed at this place, but in this chart there is no spring on line chart. So it interpretation of line charts are different. Mostly large institutional investors may be using it, but it is not very good chart to be used for analysis by retailers. It can be used to identify whether stock is moving up, moving sideways, or moving down, but it is less elaborate chart. It can be used for identification of support, resistance, and sometimes pattern identification and trend identification. Then here is one very interesting chart which is point and figure chart, and point and figure chart is integral part of Wyckoff-ian analysis. Here in accumulation there are 3 laws in Wyckoff. One is law of supply versus demand, another law is cause and effect, and third law is effort versus result. So supply and demand can be very well seen from candlestick chart. Effort versus result can be seen from bar charts. Volume spread analysis is tool for identifying that. And cause and effect is a chart, is a point, is a law which is very useful, and point and figure is chart which can identify how much is cause. Like if there is accumulation in this region, then we can project the targets of this accumulation. The cause built over here, we can project targets for this accumulation by calculating this range in terms of point and figure. Point and figure chart is not based on candles, it is not based on time frame, it is noiseless chart, and candles are formed when they are moving in one direction. Here we can see that there is 3 box reversal, 3 points and 1 box reversal. So when a candle moves in that particular time period, this is 1 hour chart. So if candle moves for more than 3 points in 1 hour, only then next candle is formed, next cross or O is formed. So it is little bit tedious to understand how it is formed, but it is not useful, not required to know how it is formed. What is important is how to identify and project the targets. That identification of projects and projection of targets is it will take around 3-4 hours to discuss about that at least. Then this is another Heiken-Ashi chart, another chart type where there is less noise and we can see one directional move. And I don't use this chart for trading purpose, so I don't know details, but it looks very nice that it is moving in one direction and it may be very useful chart for trading. If somebody knows how to use it, it can be good handy option. I don't need it right now. Then there are other charts like Renko chart, Kagi chart, volume candle chart. These different types of charts are available, and there are different purposes for all charts. Renko chart moves in one direction. It is similar to Kagi chart, and I don't know how to use them. I have not studied them in details, but there are chart patterns available. Volume candle chart is a chart, it is similar to candlestick chart. Only thing is the thickness of candle increases when volume is high and it decreases when volume is low. So it is not very useful to draw trend lines and all those things, but it can represent volume, in which candle volume is more. Then let's come to price action. Price action means it is like tape reading, bar by bar candle reading. When one candle is formed, with respect to previous few candles, we can determine whether this is bullish candle, strongly bullish candle, or bearish candle. What are buyers doing here? What are sellers doing here? Are they buying actively, aggressively, or are they waiting for new opportunities? What are sellers doing? Is anybody afraid? So these things can be seen by using price action, tape reading. Then sentiment analysis, as I said, if people are afraid of the things happening in market, then if they are afraid, then they will start selling rapidly without considering, without waiting for higher prices. That's why in 2020 till April, prices fell rapidly. Then if sentiment is strongly bullish, prices go on increasing without worrying about how much is the previous movement. If today it is increasing 7%, tomorrow it may increase 10%, day after tomorrow it may increase 15% if strong sentiment is available. Then we can identify buyers and seller, where buyer is buying, where seller is selling, where last time seller has sold. These things can be identified using price action. So when there are buyers sitting at one place, unless those buyers are destroyed, sellers will not have upper hand. Once sellers get upper hand, then buyers will have to wait. So that thing can be identified on chart. There are some peculiar charts, peculiar patterns where there is a quote by Al Brooks. He says that it can be by the close rally. By the close rally means if one candle forms and it closes. For example, one stock is trading at 1001 rupees and it is intraday chart 1001 to 1003 and it closes at 1003. Then next candle opens at 1003 and closes at 1006. So there is no downside. Then after closing at 1006, next candle opens at 1006 and it goes on increasing till 1010. So this kind of rally is called as buy the close bull rally. There are people who are buying at every candle close and it is increasing rapidly. Prices are not retracing downwards. So similarly, by the sell the close bear rally is also seen. It shows strong sentiment. So that thing can be identified using candlesticks. Then there are different methods to identify demand and supply zones. So demand zones are used to buy and supply zones are used to book profits or sell short. So these things are very useful for trading purpose. Then cause and effect analysis, as I said on point and figure chart, it can be done using price action. Effort versus result, it can be used using volume spread analysis. Market structure identification. Market structure is very important aspect of trading, of analysis. It was Dow's theory, and he said that when markets are trending, they form higher high, higher low. When it is uptrend, and when it is downtrend, it forms lower low, lower high. But it is very important to identify uh, how to make these distinctions, how to identify which is actual higher high, which is actual higher low, because it is complex structure. Price does not go in one direction, and usually higher high, higher low may have sometimes lower low formation, lower high, lower low formation in uptrend, and then suddenly it starts going up again. So sometimes it can be confusing if market structure is not understood properly. Then there are different types of investors, and we must know who am I as a investor or as a trader, because unless we know ourselves, we cannot make proper decisions. So there are different types of investors, like value investors. Value investor means like Warren Buffett, like people who have lot of money. They have so much money that they cannot deploy their money in one stock at one time, and they wait for good value propositions. For example, if they want to invest in TCS, which is making daily high nowadays, they will not invest at that time, because if they start investing in TCS right now, prices of TCS will go skyrocketing. So they wait for bearish sentiment to occur, and when prices are falling rapidly, lot of people are afraid, they start selling in huge quantities, they sell everything they have. In such time, what happens is value investors identify the value zone and they start supporting price. They can buy large amount of shares without increasing the share prices in such times, and then they wait for some time. If prices start increasing, so again prices start falling, and when previous low, prices go below previous low, they again start buying. So these people are value investors, they have so much money that they can move prices in their favor, and they have capacity to hold on for long period of time. Like Dr. Burry from the Big Short movie, he started shorting bond markets for properties in 2005. He identified that it is a bubble in that market, and he started investing in 2005. He saw some losses, he waited till 2008, and ultimately he got around 490% returns in 3 years. But he was kind of value investor, he could wait in losses, he could book profits when it was in nice green. Then there are trend follower kind of people. Trend followers are those people who take advantage of value investors. Value investors have capacity to move markets, and they buy at value periods. So trend followers can check on chart that at this time value investors are investing their money, there is increasing volumes and prices are not falling rapidly like previous period. That time trend followers come in picture, and when higher high starts forming, these people invest their money to make new highs, and then prices start rising up. So trend followers are, these people come late, but these people help value investors to increase the prices. Then there are other people who are mean reversion traders, means they buy at bottom and sell at top. Not exactly at bottom and top, but midway. They buy after prices start increasing, or if there is rapid fall and prices go to oversold region, then they buy, and when prices come back, they sell. If prices are going up in uptrend, then when stock is in overbought zone, then they short these stocks, and when prices fall back, they book their profits. So these are kind of mean reversion traders. These people may be using demand and supply areas to book their profits on and take their new positions. Then there are many people like Manmoji gamblers. They trade based on tips. They take advices from people in groups. They take trades based on their own happy minds, and they don't listen to any rules. They don't have any rules basically. They even if somebody who has advised to buy has exited his original trade, they do not exit because they think that previous trade had worked, and even after hitting stop loss it went on again and it gave profit, so even this time it may happen. So there are many people like that. Even I have done this kind of thing, these mistakes in my past, but now I stick to my stop losses. We must know out of these people who, what is our personality and which is our suitable method. Accordingly we have to either trade or invest based on appropriate knowledge. So that concludes my presentation. Thank you for listening.
Thanks,
Yeah.
Prashant. So over to you, Sachin.
Yeah, Prashant, very nice presentation. Little bit really basic way to understand the technical analysis. I think so. We have one question. We'll take that and then we will discuss.
Yeah,
Prashant?
sure.
Okay, so the question is,
Can you give the idea
what is spring?
what is spring? Maybe the on the chart which Prashant was talking.
Yeah, sure. So we'll first go to that chart.
I think so. It was Havells, right? Prashant?
Yes, yes.
Yeah.
So it was Havells chart on daily time frame. Spring is basically stop loss hunting. So as I said that people who are value investors, they start buying when prices fall rapidly. Here we can see that Havells price is falling rapidly. There was some area of buying here previously, and from here prices went up. So again at this levels, these value investors start putting in their money. So these 5 candles were red, and then suddenly this candle was green. In this candle there was buying, and after buying they went on silent mode. Again prices fell down. So this happens regularly, and then what do we see, that this is forming a trading range. This is high, this is low. So usually what happens is, many people who are not aware of stop loss hunting, or they just want to enter, they just want to buy, they can buy over here, that this will go, this will break out, this will break out, this is breaking out here. So in that condition they buy. Then what is the place for their stop loss? They keep their stop loss below this candle. So once this broke out and this was stop loss, at this time people may exit below this candle. If they don't exit, they will exit here, that stop loss hit, stop loss hit. So they will exit here, then again they will wait, they will wait for next breakout. Many people who did not exit at this time, they see that prices went up again till resistance level, and they think that now prices should go up, they should go higher. So here is higher, here is low, here is higher low, and again higher low. So there are two higher lows, one higher high formed here. They will see that prices should go up because it is trending upward here, and they think that prices should go up, break this level and go up. When prices do not break this level, they will keep their stop losses below these two candles, below double bottom. Because most commonly taught thing is, double bottom is very strong support, it should not be broken. If it is broken, it will go down. So they can think that the range will go down and it can come around 855 levels. So many people keep stop losses below double bottom, and many short people who are going short, they will enter at stop loss market below this level. So this is a spring candle which captures short sellers and those who entered the trade but could not hold on to their positions with appropriate stops. Even after analyzing that this is going to be a bullish stock and it will go up, they do not hold it appropriate stop loss. So that kind of stop loss hunting is done, and it forms a spring. This is useful for large institutional investors because they want to see how many sellers are there in market. If there are many sellers, then what will happen? There will be huge volume, and if volume increases means there is lot of supply. So if prices go up, prices will face lot of resistance from sellers. If there is not much of supply and there is low volume below this, that means supply has been absorbed. So prices will be moving easily, there will be ease of movement. So this is kind of testing mechanism of big institutional investors, where they check for supply in market. So after successful spring, it can give nice up moves. And here stop loss was very small, it was around 27 rupees stop loss, and it went on to about 275 rupees till recent high, means almost 10 times the risk, and around 8 or 9 times till my profit booking levels.
So Prashant, what I understand is that now again it has gone in that consolidation phase.
Yeah, small consolidation is happening.
Yes. Okay. So can you just now we'll ask some basic questions are there. Now
Yes.
can you have only actually said, somebody asked you, can you explain upper circuit and lower circuit?
Upper circuit and lower circuit, yeah, definitely.
So maybe we can let the panelists answer that. They are also experts. Prasad, can you please explain what is upper circuit and lower circuit?
I'll go for that.
Okay, Sachin, you can go.
Actually, in upper circuit, predominantly there are two types: upper circuit and the lower circuit. So upper circuit, we say when there is only predominantly the stock moves upward only, and there are no sellers predominantly, only buyers. So you can't sell predominantly. So each stock has that. If there is a Nifty 50 stock or the FNO stocks, predominantly FNO only the upper circuit and lower circuit occurs. Generally, is 20%, 10 to 20%, depending upon the each stock, which is pre-decided by the NSE. And if there is upper circuit, predominantly the prices has gone up. It will give some time like a holding time for the stock, and then again, if the more buyers are there, again the upper circuit starts up. Right, Prashant? Anything you can add on that?
No, that's fine.
Yeah.
And lower circuit is exactly
Same.
the opposite. It goes 10 to
Vice
20%
versa.
down.
Vice versa.
It
Actually,
happens on the same trading day.
yes. Normally, if you see the Nifty also underwent the lower circuit at the time of the COVID, especially in the 19, 20, and 21st of March, what I recollect roughly, when the Modi ji then decided for lockdown, and then twice it went the lower circuit, and once the lower circuit occurs twice of the Nifty, the market is closed for the day, predominantly 10%. Indian is 10%, and I think so the Dow is around 7.5%. The US market.
There is also limit about timing when the circuits happen.
Absolutely. What Prashant is telling is right. If it is occurring predominantly before 12 hours to the 2 hours, the market will close down immediately. And otherwise, they have some time period. It's after the right, Prashant. After the second half, then they may allow one more time to continue.
And
So
in
there is
FNO
one
stocks,
point,
mostly they do not stop trading.
Sorry,
even
Prashant.
if-
Prashant, you go ahead. Then I will make my point.
And in FNO stocks, most of the times the circuits are opened and they do not stop trading. That is the advantage of FNO stocks. If we do not get stuck in a position, even in circuits will open and trading will resume.
So what I understand from upper and lower circuit is that if it has gone in upper circuit and if I'm holding the share for maybe a month or two and I want to make profits, that is the best time to make the profit.
Yes,
Am I
yes,
right?
Yes.
Yeah.
That
Once
may
it
be.
hits the upper
That
circuit.
may be a good point.
Yes.
Because it can go one more upper circuit also. So you can't tell.
Means
So
some
at least you
stocks
can book some profit
continuously-
in that upper circuit.
Yeah, that is it. Then what's the second last slide of the Prashant was very important. Who are you? You should understand. Are you an active investor, intraday trader, or a long-time investor? Right, Prashant?
Yes. And I prefer not to trade in circuit stocks because usually these are stocks which if we buy today, we cannot sell today. We need to usually sell it after a day or two. Most
T
of the
plus
circuit
2.
stocks which run
That-
on circuits.
T plus 2 roughly.
Yes. T plus 2 roughly, and most of the stocks which run in circuits, they are kind of these stocks. They cannot be bought and sold on same time. So there may be upper circuit in today's market. Tomorrow it may be upper circuit. We may get entry. Day after tomorrow it may fall and it may go into lower circuit and then go in continuous lower circuit and we may not have exit.
Yeah, there are a lot of examples, Ruchi Soya and all that stuff.
Yes.
Orchid Pharma and a lot of
Yeah.
other examples are there,
So I
where the
prefer not to
predominant
trade in
manipulation
this
occurs.
kind of
Manipulations
circuit
occur at
stocks.
the high level.
Yes,
Yeah.
Definitely.
Yeah, Neeraj. go
Prasad,
ahead.
you want to add anything?
No, I mean that is okay.
Okay.
About it.
So the next question, Prasad, I'll ask you that what Prashant was using was a one-day chart. Which time frames? All three of you can answer. Maybe it is separately for all three of you. Which time frames do you use for positional and swing trades, and which time frame you use for intraday? Do you do intraday? So Prasad, can you just start?
Okay, so the teaching is that you require to look at the bigger picture first. So if you are an intraday trader, you require to look at a 1 hourly chart. Then you usually take your trades on a 15-minute chart or a 5-minute chart. So if you are a swing trader, then you look at the weekly chart, you look at the trend, then you look at the day chart as to what is happening right now in the market, and then you time your entries according to the 1 hour chart. I think that is what is the common teaching. I'm not very sure, but this is how it should be.
Okay, what about you, Dr. Prashant?
For intraday, there is a question: do you do intraday?
Yeah, that is the one.
Yeah, intraday trading is basically for fun or to make your systems strong, because by intraday trading you can get lot of trades and we can check our system, whatever rules we are following, whether we can follow them and whether we need to do any changes. If we select daily chart, the chart forms over a period of couple of weeks or so, and then we get entry in a month or so, and then that forms. So in a year, in one particular stock we may get at only 3 or 4 trades, whereas for intraday we can get at least 1 or 2 trades in a week, and in 1 year we can definitely get 100 trades. So we can easily check our system. Intraday gives lot of fun, lot of adrenaline rush, but profit and money making is less with intraday trades. For profits, we need to trade with larger time frame. Then there is another question, positional and swing trades. So what is positional trade and what is swing trade? Many people identify positional trade and swing trade as per time period, that I will trade for swing over 3-4 days, and positional will be for 1 month or so. But actually it depends what is a swing. When we are checking one chart from one low to one high, that is called a swing. So it can be intraday as well, or it can be for a weekly trade, for a monthly trade, or for a year also. Swing trade depends on which time frame we are using. From bottom of one swing to top of that swing, it is a part of swing. And positional trade means when trend reverses. Suppose one stock is in downtrend or consolidation and it starts trending up, till the time uptrend is intact and there is no sign of downtrend. When first sign of downtrend comes and we exit our position, that is one complete position, one complete trend. So it can be for shorter duration. On 5-minute chart, one swing can last for around 1 hour or 2 hours, and for 5-minute chart one positional trade can last for 2-3 days, 4 days, whereas for hourly chart it can be more time. So we have to understand what is swing and what is position. Swing means one portion of full trend, and positional trade means from bottom of trend to top of reversal of trend. Then let's come to the question of which time frame should we use. So daily charts are most important charts, and if we want to do intraday trading also, daily high daily low is important. So checking daily chart is important, and knowing at which portion of the trend are we. Then I use usually 3 time frames, and my time frames are around 4 to 5 times of smaller time frame or larger time frame. For example, if I am using a daily chart and lower time frames, so from daily next candle charts are 75-minute charts for me. There are 5 75-minute charts in one day. I do not use hourly chart because in hourly chart last candle is only of 15 minutes. If we use 75-minute charts, there are equal 75-minute candles in one day, and from that next is 15 minutes. If I want to use even smaller, then 5-minute or 3-minute. So it depends what kind of trading you want to do, but for me I use daily, 75-minute and 15-minute, and for larger time frame I use weekly also. So these are 4 main working time frames for me. For commodity, these time frames will change, and usually for commodity after daily I use 3-hour chart.
Okay, thank you,
Commodity means
Prashant.
any specific thing, just little bit on that. Any specific sector, what you're talking?
Commodity
Like,
means silver, gold, crude.
yeah, that. So including roughly all. So nothing specific for gold or silver, like just.
Yeah,
what is
because
different?
the time of commodity starts at 9 o'clock and it ends at around 11:30. So time period, I distribute my candles as per time period.
Okay. Thanks,
I
Prashant. Very
just,
nicely
yeah,
explained. Yeah, very
I
nicely
would like to have a comment on this. Please, those who are just started trading or have been trading only for last few months, do not try to do intraday. I have had losses in one trade in one intraday of almost 5,000 rupees when I started doing it. So it is best that if you even want to do any type of trade, the stop loss is your helper. get out when the right time is. Dr. Prasad had recently put a comment. Prasad, can you read out that comment which was there on the finance groups we had put?
I don't remember. I mean, what you're
Achha.
talking about.
Yeah, you had told me
Okay.
that there's send a screenshot of a photograph. Maybe I can open it up for you.
Yes, you can open it up.
Yeah.
When the
So-
the teaching is that you require to cut your losses and let your
Yes.
winners run.
That is very
So
important.
can I ask a question now,
Yes, go ahead.
Dr. Prashant?
Yeah, sure.
Yes. My question is now, how do you hide your stop losses from the market makers? What should be the strategy to apply a stop loss such that you can hide from the market makers?
Actually, market makers cannot see our stop losses. They don't know
Okay.
what is our stop loss level,
Okay.
and they just know the areas that these are areas like double bottoms. Below that double bottom, there will be high liquidity. Many people will be selling short, or many people
Okay.
will be exiting their longs.
Okay.
So these are kind of charts which are available to everybody, and everyone knows that people learn how to keep stop losses by keeping it below double bottom, or keeping below swing high, swing low, below swing low, and they just bring the prices below that level to hunt the stop loss. Everybody's stop loss is not hunted. Sometimes if we keep stop loss around 0.1% below that low, it may not get hunted. Sometimes it may get hunted, but what matters is what is our target, and if we keep that stop loss, how many times that stop loss is hit. For example, if a stock's price is around 1000 rupees and we keep stop loss 1 rupee below previous low, then our stop loss is hunted 50 times, 50% times, and our targets are achieved remaining 50% times. If keeping that stop loss 1 rupee below swing gives us a risk to reward of 1 risk 5 reward, this is one equation. In another equation, for example, we keep stop loss of 5 rupees, and in that we get around 80% times right, and 20% times our stop loss is hit. This is example. So in first case we are getting 1:5 reward. In this case, with 80% accuracy, we are getting around 1:2 risk to reward. Means we are right 80% of the times. Highest reward we get is 2 times the risk involved, and we are getting 20% times losses only. So we need to calculate how this will uh, what result will it produce after 100 trades. So in first example, with 50% accuracy and 5 times risk, 5 times reward, what we get is 50% times out of 100, 50 trades will be positive, they will give 5 times reward, that will be 250, and 50 times our risk will be hit, stop loss will be hit, and we lose 50 times. So from out of 100 trades, we get 250 minus 50, that is 200. Initial risk was 10 rupees, so we get 200 times reward from that. In another example, we have 80% accuracy and we are getting only 2 times reward because we have increased our risk. So with that, calculation comes out to be 80 into 20 is 160, and we are losing 20 times, so we lose 20. It is called as R calculation. So 160 minus 20 will be 140. So even if we are winning more times, 80% times we are in profit, still our profit is 140. And when we are making stop loss smaller and we have smaller risk, smaller reward, larger reward, but small less profit chances, 50% only, even then we are making 200 R. So this calculation is important. This is more important than minimizing our risk or minimizing our chances of losses. Losses are part and parcel of the game. We must know how much we should lose, how much we should take rewards with that risk. If we take 1 is to 10, means if we are risking 100 rupees and we are taking profit of 1000 rupees, even out of 10, if we make profit in 2 trades, we'll make lot of profit.
So how do you do your position sizing in this?
Position sizing will depend on our stop loss, and if I have suppose 100 rupees in my account and I want to risk 0.5%, accordingly I will calculate the position size.
So at a time, if we have our risk of 0.5% at a time, are we like looking at 20 trades at one point of time, or we just
No, that risk is on portfolio. If I
okay?
have suppose 10 lakh rupees in my account and I want to risk 0.5% in one trade, and my risk at one time is 2%, so I can take only 4 trades, not more than that. It is not essential to deploy full capital.
Right. Okay, I just wanted to ask you something more. Just a second, I just written it down. Yeah. How do you identify? How do you draw your demand and supply levels?
Demand and supply levels.
How do you
Actually,
draw them?
uh, it will require another session, because drawing demand and supply levels cannot be just described in such way. It at least takes 10 to 14 hours duration minimum to identify demand and supply zone properly and trade them properly.
Okay. And
Because
what is your take on market profile? I mean, what
market
market
profile, there are different market profile indicators, and they indicate horizontal volume where price has spent maximum time.
Mhm.
So these kind of highest volume levels can represent a resistance level or a support level, and from there that place prices can show reversal. But ultimately what comes is your price reading at that point of time, when price is reaching at that level, how it is behaving. If it is kind of buy the close rally, and prices are very bullish, then there are chances that resistance may be broken, or
Okay.
it can absorb the pressure and then gradually break out. So there are different patterns. I don't use this volume profile. I use simple volume at bottom and volume spread analysis.
So now, if there has been a breakout in a stock, how
Mhm.
do you know that the pullback, if you're a pullback trader and if there has been a breakout in the stock, how do you know that now this is the pullback and from where would it start reversing back? How do you know where the pullback ends?
Yeah, this is very interesting question. Actually, it depends what is the setup before that breakout.
Mhm.
Means it can be a kind of breakout where prices may not come down back, and they may keep going higher and higher, and then
Yeah.
consolidate at higher level without any pullback, and then again breakout. So there are different market phases. When trend is bearish, there will be one point where value investors will support the prices, they will accumulate, then prices will go sideways, and many people will there will be volatility, many people will enter, many will exit. There will be time stop where many people will think that this is not performing, I will exit this, and accumulation will happen. Once accumulation is happened, then stocks start moving up. If it is accumulation and proper position has been taken by value investors, market movers, then they check for any supply, remaining supply. If there is no supply, then stocks can rise rapidly up. So what they do is, first they increase the prices, then prices come down very deep. From if suppose from 100 rupees movement has started and it goes to 120, then it comes almost to 100 to 103 rupees level. It may be 70-80% retracement. Then next phase comes where there is 50% retracement. Then after that there is retracement only till previous high, and in next phase there is no retracement, sideways consolidation, and prices move rapidly up. So there are different phases. When prices are stocks are in markup phase and there is no supply in market, then it will go on increasing without pullback. But when there is supply in market, or it is in initial phase of markup, then it comes down and tests the supply. So many times we see that stock prices rises rapidly once it crosses higher levels. It goes to
So
top
after
and
a shakeout,
keeps on
so
going.
so the shakeout is the last phase of accumulation.
Depends. Sometimes it can be shakeout. Sometimes it can be higher point of support. Last point of support is higher. So it's not always that shakeout will be last point of accumulation. But yes, many times
But
shakeout or spring is the last point of accumulation, and then it may test spring or it may not test spring.
okay, thank you very much.
Okay, thanks for Prashant. I think there is one more question for Firoz, right? Firoz raised the hand.
So before that, there is Chetan who wants to ask a question about spring.
Yeah,
So
go
let's
ahead,
take
Chetan.
Chetan, you can unmute yourself and ask. Chetan, you are there? I don't know. He's not listening. Anyway, so we'll go to next. Ramakrishna, which chart type do you suggest for a beginner? Any particular method to learn for basics? I think that is what the lecture was about.
I use candlestick chart or bar charts. Candlestick charts are very commonly used. Most commonly used are candlestick charts. So beginners can start with that.
Okay. So Harsha is asking where to read about fundamental analysis for a stock which site. I think all three of you may have a different opinion, so I want all three of you to answer.
My answer will be Zerodha Varsity.
Zerodha Varsity. What about you, Sachin?
Yeah, I think so. It is very nice. That is a simple and easiest way, I feel.
Okay.
The question is where to read about fundamental analysis.
No, they I think are answering any method to learn for basics. That is what you answered, right, Prasad?
Yeah.
Zerodha. If you want to make a start, it's Zerodha Varsity.
Fundamental analysis also Zerodha?
Zerodha Varsity.
Okay. Prashant, any other option from your side?
My answer to this question is even if we learn fundamental analysis, do we have resources to do fundamental analysis like the way it has to be done? Can we meet CEOs of company? Can we check the ground reality? Can we check with CS whether their results are manipulated or real? Are they actual? Is it possible for us? Please watch the Big Short movie. They have shown how they do fundamental analysis. They visit different people. They need high level contacts to identify reality. So that's why I do not go for fundamental analysis.
Okay.
Chetan is here. Chetan,
Yeah,
unmute
Chetan
and ask
wants-
your question. Your question is in detail.
Yeah. Thank you, Neeraj, for allowing question. Thank you, Prashant sir. I keep on following you up very nicely. And regarding your Wyckoff phenomenon, which is very interesting.
Chetan,
How
your
do you
voice is
decide?
having a lot of disturbance. Are you using two
Uh,
devices?
Chetan, use one device.
No, I'm using only one device.
Okay.
I have typed the question. Neeraj, can you just
Achha, I
forward
will
that
read it.
question?
I will read it out to you. If I missed out, then you unmute
Yeah,
yourself.
please.
So Chetan is asking regarding Wyckoff spring trade, how to identify which one is consolidation and which one will break out. Like, do you enter on third retest or on reversal candles, like price action entry? And second question is, which is good study material to read about Wyckoff?
So spring trade, how to identify which one is consolidation and which one will break out.
Can you show a graph and maybe that will be easier for you to show them?
Yeah, sure. So what I do is I never take a breakout trade. Whenever stock is breaking out, I just wait and watch. If it breaks out and goes higher and higher, I keep on watching till it consolidates. Here we can see what I usually do is I mark high and low. This low I had marked this low, I had marked this low. These highs were marked, and at these prices I keep alerts. When stock reaches this level, I check what happens. Sometimes it may break down or it may break out, but closing is important. If the close is below or near this, then it is not a successful breakout. So I just wait, and this is kind of upthrust action. It is reverse of spring. So this shows that breakout is failing and there are chances of lower prices. I keep highs and lows on daily chart and then check what happens. Here the prices have reversed and there are chances of reversal on upside. Ultimately prices went up. We need to analyze these charts with volume spread analysis and maybe demand supply also, whether there is any supply area, demand area below this, then then there are chances that price will go to test that demand area and then rise. If there is no nearby demand area, then it may form a spring. So it is kind of after checking multiple charts we can understand which type of which are the possible areas where spring will form, which are possible areas where breakout will succeed. And breakout trading has a disadvantage that most of the time stop loss is deep. If we check here, if we take a breakout trade here, that this is breaking out below this high, and we take a trade after this breakout, stop loss will be minimum below this, ideally below this. So this is huge stop loss. But if it fails, if a breakout fails, then our stop loss is above this. Like here this breakout failed and stop loss was above this and target is below this. So we can check a risk to reward here. This is confirmation of upthrust. There was 37.7 points, means suppose 80 points, and it went 40 points, it went on to go till 91 points. This was around 75 points, means 2 times the reward was available. This risk related to risk, 2 times reward was available. So this kind of trade can be taken. There are good chances stock is in down trade, there is upthrust, so one more down trade is possible, it can be taken, it is high probability trade. But here stock is in down trade, it is forming a spring, so there are less chances that it will go all the way up. Upthrust is always better to be taken in downtrend, and spring is always better to be taken in uptrend. And I never take a breakout trade at highest level. In this I had taken a spring retest and breakout of this level, where I thought that it is going in phase D of the Wyckoff phase. So that time I took a breakout. I do not take breakout at this level or this level.
Okay, so Prashant, I would like to have a rapid fire question where this chart is now open between Sachin, you, me, and Prasad. So now on the when would you like to enter? What is the price where you will enter? Now we have the chart open. Just tell me 2 answers. What is the price you will enter, and what is the price will be your target, and what will be your stop loss for this position now?
Right now.
Yeah, Prasad, if you want, you can start. So this is the chart in front of you, and say today is instead of it's 19th of July, and the stock is just breaking out. When will you enter?
See,
or you would have already entered before that?
No, I mean, if I'm looking at, if I'm not in this trade and I'm looking at this particular chart right now,
yes,
I would try to see to it that it reaches somewhere below 1231.
Okay.
To have my buying order, and then below the 3 days back, whatever the candle is there, below that I'll put a stop.
Okay. What about Sachin?
Today's your question was somewhere roughly here around 19th of.
Yeah, I was asking actually 19th July, but Prasad answered something differently. So on 19th July, when it has just started to break out, will you enter? Or
no,
will
I will wait for at least 1 or 2 green candles, means 1 or 2 days, and when it is in uptrend, then definitely I'll try to enter.
Okay, and what will be your target and stop loss?
Depending there are 2 accounts of me, so predominantly if I'm predominantly at least 5 to 10% will be my targets for this at least initially, and the long term I'll be definitely waiting for more than 30 to 40%.
So for basics, what my opinion is that what Prashant is saying, Prashant is very expert in technical analysis. He has been doing this for many years. So is Prasad is doing it for almost 2 to 3 years, and so is Sachin, who's doing for more than 2 years. So for beginners, candlestick charts are available on Zerodha. They are available on TradingView. We are going to tell you one more site where it is available. You should register. That is a very good thing. And what I would recommend is for a beginning trading, somehow I like to do breakout trading. And when you're doing a breakout trading, you have to enter in an early breakout and exit after 5 to 10 to 15% profit maximum. Don't try to wait for a 20-25% profit. That 5 to 15% profit can come after many days or come after 2-3 trading sessions also. This I have learned from WealthCon, which is by Dr. Ramnath Bhute. So I would like to mention his name. It was called Cool Trading. So, but Prashant is a more advanced trader. He can study the graph in much more detail, unlike me, whom I am a basic trader. So I would like to maybe try to get something like a small trade and come out of it fast. But he would like to basically wait and make the maximum trade out of this in a very short time. And with this, Firoz Khan would like to comment something on position sizing. Prashant, you can stop your screen size, screen share. Yeah. So Firoz Khan, you want to unmute and make a comment? You can go ahead. Firoz, are you here? I think he's unmute. Okay.
I will ask something to Prashant.
He's here.
Okay, let him ask first. Yeah.
Firoz is here. Yes, go ahead, Firoz.
First of all, thanks a lot for giving me a chance to speak here. And thanks to Dr. Prashant, he has very aptly explained the topic. With the permission of all the experienced mentors and the teachers here, I would like to share the screen and tell something about the position sizing which have been discussed, if you all permit me.
Yeah, Firoz, actually we are just past time, so just do it in a short while.
Yeah, definitely. Can you see my screen?
Yes.
Yes.
Yeah. So the basic question is, how do you decide where you are entering, and everybody's talking about stop loss and targets. It's not just about stop loss and targets. There's a indicator in TradingView. If you can see this, there's a position. There's an indicator called as long position.
Okay.
If you do it, and suppose this is the stock which we are talking about right now, the Havel stock.
Yes.
This video is already shared. I have shared this video on position sizing using this tool.
Yeah. So this was the level at which the resistances were marked, and this is the day when the breakout is happening. So
Yes.
if you do this long position indicator, it will give you not only how much you should do, but it will also tell you how much quantity of stock you should take, so as to limit your stop loss to 500 rupees or whatever stop loss amount you want to set for it. It's very easy and very helpful for the beginners, especially if you don't know what position sizing is. Here you can see, you can see this. I have set the risk as 1000 rupees risk, and when I mark it, it gives me the exact point at which my stop loss can be, including how much quantity should I invest in the stock. So it is not just the amount of stop loss and targets. We should also concentrate on the positions, number of stocks we need to buy. Secondly, I agree to the point that some of us are trading in support resistance levels, and some of us are more of a momentum breakout traders. So in this stock, if you are a momentum breakout trader, you have to keep a stop loss below the swing, that is below this candle. And if you see, if I move this, the 16 has changed to 14. So it is not just the number of stocks which are decreasing. My risk is also constant, so that I don't lose capital even if my trade goes against my view.
Thanks, Firoz. Thank you for the comment. For people who are basically wanting to know more about this, Prashant has a video on it. Prashant, can you just put it in the chat box or in the Dr. Finance groups whenever you have time?
I
I
have
think the
already shared
Prashant
that
has,
video.
yeah, the Prashant has
So you
already
may,
shared that
people who
video.
are new, because there are many new people who have joined in. So maybe tomorrow morning again you can put it as a refresh.
Sure, sure.
Yeah. Okay. So thank you, Firoz. Thanks for your comment. This was something new to me also. I was also not aware of this. And for
And
the next question was, Sachin, you want to make a comment?
no problem. Go ahead.
Okay.
He
So the
needs to
next
talk.
question,
Yeah.
sorry. The next question was how to select a stock for investing if you don't do fundamental analysis. So that is Harsha. I think maybe let me answer this. So if you're going to do a long-term investment, like you want to keep your shares and let it grow for 5 to 7 years, and you don't want to do trading on it, you just buy on dips or do SIPs in the stocks, then you have to do fundamental analysis. Prashant, can you just comment on that? Any idea?
If one is not willing to do fundamental analysis, then it is no point in investing in stocks directly. Mutual funds are best option. Mutual fund managers will do study for you and they will invest. We cannot do investment blindly. Either we must know fundamental analysis or technical analysis. One thing out of two is important.
Yes. So for beginners, candlesticks are available on Zerodha, though the candlesticks are available on tradingyou.com. And Prashant will mention, when Prashant has mentioned in the Dr. Finance groups about a website called FIRES, FYERS, right?
Yes, yes.
FIRES. You can make a free trading and demat account in that. You don't need to do trading in that. You can make an account and it's got most advanced graphs of TradingView and candlesticks. So Chetan is asking any study material on Wyckoff.
There is a lot of study material available. It depends on how much you want to study. There are
Let's
many
start with
books.
something basic, Prashant.
Yeah,
Maybe
there are
some
many
basic.
books from Wyckoff. So I will share those books in our Telegram group. I think I have already shared, but I will share it again.
Okay. So any book name would you like to mention? Sachin, would you like to mention anything?
No, I want to know I want to ask a question to the Prashant. Go ahead, first
Yes.
finish you. Yeah.
No, yes, you can go ahead.
Yeah, as Prashant is an expert in technical, like many times the question asks 12,000, 15,000. When is Nifty bubble going to burst? Was any indication there before the COVID that in a technical analysis that the market is going to go down?
Yes.
Not exactly that 40%, 50%, but definitely, like, can you just in the chart, can you explain, Prashant, roughly the Nifty chart, that COVID and now what is the situation now, if possible?
Yeah, there are always indications of trend reversal. Nifty 50. So this is a chart of Nifty.
Daily basis, right, Prashant?
Yes, daily basis.
And this fall down is the COVID lockdown.
Yes. So this is the chart before fall.
Okay, this was the chart before fall.
Yes.
Okay.
After this candle, there was a fall.
This was roughly on the Feb month, right, Prashant?
Yeah.
No, this is the end of Feb. Yeah, 26 Feb. Yes.
Yeah, go ahead.
Okay. So if we check daily chart, this is high, this is low. This was Nirmala Sitharaman candle. So let us start from here.
That happened in both the years, right?
Oh, sorry. Just a minute.
Right, except the last year.
2020 and 2021, both years it happened. That is 2020, no? Nirmala Sitharaman candle.
Yes, yes.
So for people who don't know, Nirmala Sitharaman was the finance minister of India. And this was the candle on the day of the budget, when the budget was announced. That is why it is infamously or famously known as the Nirmala Sitharaman candle, when the market suddenly shot up on one day.
So market, this was uptrend. High,
Okay.
low, higher high, higher low, higher high, higher low, higher high. This has broken 3 lows. So this was first indication.
Okay. So breaking the 3 lows, the last 3
Yes.
lows.
Yes.
Okay.
So this was first indication that everything is not good in markets and one should be cautious. So what happens is, I may have kept my stop loss below this or below this. At some some point somewhere below these stops, below these lows. And what happened, like in Kotak recent trade, it broke my, it went below my stop loss, it took my stop loss and prices come up again. What happened, it looks like a spring, it came down, went up, formed a high, then low, then again higher high. So people will be convinced that this is going up again, and it would have been better that it was better that I did not keep a stop loss, if somebody did not keep a stop loss, and it is showing good profit now. This thing happens lot of times, this happens. That's why if I decide that there is a stop loss, I exit at that stop loss. Whatever happens after that is not a problem for me. Even if it goes to skyrocket and goes high, it's not a problem. After
Okay.
that there was again low, and everybody knows what happened afterwards. So exiting here with stop loss was wise. Even at this price, somebody might have thought that this level is broken but close is above, so we can wait, and then next day it is gap down. So there is hope that this support will hold. People keep on holding. This support is broken, then they start panicking, and when there is uh, big gap down, then they start selling in panic. And here comes market maker who knows that this is high value, this is very good value area, and he can buy at this place. So this is first place where value investors have started buying, and
Okay.
retailers have started selling here. This is a place where it is showing that there is no upside momentum and downside is coming, and many of the trend followers must have exited at this place. After this low was broken, they exited next day with gap down, because this is high low, lower high, lower low after breakdown of a trend. So this confirms downtrend, and most of the trend followers have exited here.
Okay.
We
Okay, Prashant.
must understand what are the kind of people available who are trading. There are trend followers, there are contrarian traders, and there are value investors. Value investors always uh, start buying in weakness, and they always start selling in strength. So some of the value investors must have seen that this is very nice candle, and they started selling here. They kept on selling here because this was very good day for markets, and it went up rapidly, and there was high liquidity. Many people were buying here. So it is good area for sellers who want to sell in huge quantity. They get nice price at for their lot of stocks. Huge volumes can be sold in such kind of sentiment.
Okay, Prashant. Thanks. So now roughly it is looking a bullish trend only. Last 1 month, 2 months, you can say.
Yes, yes.
Okay, thank you, Prashant. Thank you, Sachin. Thank you, Prasad. With this, I think we'll close this, and we'll meet again after 2 weeks with another topic very soon. In the meantime, we have also managed to get, for those who are Dr. Finance groups and listening to this, we have managed to associate with Association of Medical Consultants Mumbai, who's going to have a small FinCon, financial conference for doctors on Sunday. So watch out this space on Ortho TV, and we will see you soon.
There
Bye-bye.
is somebody raising hand. He has
Okay.
my
Yeah.
name.
So Chetan has asked one question which Prashant can
Okay.
answer.
Any opinion about pharma sell-off?
I think
did
today
not check
Lupin
it.
and
Today, after long time, after coming to Pune, I had one surgery, so I was busy there. I did not check the charts.
so there were people asking, does Prashant operate also? Right?
Yeah. I do good surgeries of shoulder and knee.
Yeah, we know all that.
Somebody has raised hand, and his name is also Prashant Parate.
I think you have sent him the Zoom link. Your Zoom link you must have sent to him.
That is the reason lot of Prashant Parath is here.
Okay, okay.
No problem. What he wants to ask?
No, he's not. Unmute. He's not unmuting. anyways, I think we'll end this because we are already 25 minutes
Yeah, yeah.
past time.
Yeah.
Sure.
Anyway, I'll thanks Prashant, Neeraj, Ashok, and Prasad also. Really nice presentation, Prashant.
Thank you,
Okay.
thank
Bye
you.
bye.
Bye, good night.
Bye. Good night. Jagan, you can stop it.
Bye, good night.
Bye, Ashok sir.
Bye, Prashant. Thanks a lot.
Thank you, thank you.